Hello there, Pursuing Freedom friends. Thanks for tuning in to the Pursuing Freedom podcast today. I'm your host, Erin Bradley, and I'm excited for today's episode. This is a new topic that we've never explored here in over 250 episodes of the Pursuing Freedom podcast. And it's actually a topic that's very near and dear to my heart and something that a lot of people don't talk a lot about. And we're going to dig in a little bit today to a very specific mortgage product called the reverse mortgage, which don't tune out yet because you might be blown away by how life-changing this product might be for yourself and for your clients. So I've got Kevin Guttman here with us today, and Kevin has been in the mortgage space for over 21 years now, and we actually overlapped at the same company for several years back in the day. So our paths have crossed. We both learned from the same expert, and he's also the author of a book, How a Reverse Mortgage Changed My Life. And it's a compilation of stories of some of his clients, over 30 clients, I believe, and how their lives were changed by this product. So whether you're a real estate agent, a mortgage lender, or just a human being who has loved ones that will eventually turn 62, or you will eventually turn 62, then this is an episode worth tuning into because it may actually change your life. So with no further ado, Kevin, I'd love for you to give us a little backstory. How did you get to where you are today, publishing this book? I want to hear all the nitty gritty and inspire our listeners to believe and think beyond what they know to possibly be true.
When I started my career, I worked in the nonprofit world. I used to travel around the country and even around the world and raise money for people in the developing world to have clean water, medical clinic, schools, small business loans. Extremely rewarding work. However, I was traveling about half the time, and we have 5 children, so I had to be home more. Left that in 2002. My wife comes from a real estate background as well, so we started flipping houses in 2003, which was a total blast. Ultimately led me to the mortgage industry in 2004. And then, like you, I got trained in reverse mortgages in 2015. And I just was so blown away at how great the product is and how it can change people's lives. And so I just really tried to make that a major focus of my business, and been able to help hundreds of people over the years with that. And it led to writing the book, because you probably are aware that they have a bad reputation, but when people can read the stories of people like them and see how it helped them, it kind of breaks down some of those barriers.
So talk us through this transition a little bit and maybe even into some of these stories, because I almost feel like we need to start with the end in mind, because a lot of our listeners either don't know anything about the product or, to your point, have a negative connotation that is from some erroneous perception. So just educate us.
So the very first reverse mortgage was taken out in 1961. There was a widow living in Maine, and she lost her husband. And as you know, when you still have a mortgage payment, you're trying to live on one income in retirement, it's tough. And so she actually knew the local banker, because her banker played football for her husband, who was the football coach. And he went to his bank and said, listen, I know this family, I know this lady. She has a lot of equity in her house. Why don't we let her remain in her home, not make any more mortgage payments, and just access some of her equity each month in the form of interest? And so the very first reverse mortgage was born. And for 27 years, Erin, it was kind of the Wild West. Lots of companies had a version of a reverse mortgage. And honestly, there was some abuse. Some people got taken advantage of, lost their homes even. And President Reagan and Congress in 1988 got together and they passed the Home Equity Conversion Mortgage Bill, HECM. And they made it a 10-year trial bill. The purpose of the bill was to allow a senior to remain in home, maintain their independence, gain access to a portion of their equity, refrain from having a monthly payment, and entertain the lifestyle they've worked for and dreamed of. After 10 years, they made the law permanent. Over the years, they've tweaked the program to make it safer for seniors. It's probably the safest loan program out there. It's so regulated and overseen by federal and state agencies. And I always tell people it's good news, bad news. Good news, it's a government loan. Bad news, it's a government loan, because there's some extra layers, if you will, with underwriting and such that we have to go through. But for the most part, a loan is a loan. It performs just like a traditional mortgage, with the exception of there's no monthly payment, and it's a non-recourse loan, which means the borrower doesn't owe the money back. The only recourse the lender has is the sale or refinance of the home. So no monthly payment, and it's a non-recourse loan. Those are two of the big distinctions with a reverse mortgage.
So how do you determine when this is the right fit? Because I feel like we may have even been in the same room during this training, and I was so blown away. And I remember thinking to myself, if only my parents had known about this or had access to it. But ironically, I remember being the youngest of five kids, bringing it up to possibly my older brother who was in finance, and feeling like there was some pushback, some resistance around this product. And I was sitting there, and of course I was young, and but also feeling inspired by it and wondering, like, why doesn't everybody know about this, and why isn't everybody doing this? I couldn't seem to figure out what the drawback could be. So what's your experience with that? Like, is there anyone that it's not the right fit for, or are you, of the mindset now that this is an absolute godsend to anyone and everyone as soon as possible?
So I always say somebody should get one the day that they qualify. So even if somebody doesn't want it or need it, they should learn about it. They should know about it. They should understand how it works. So when does somebody qualify? At least one borrower is 62. They have the right property type, single family home, townhome, patio home, FHA approved condo, 2 to 4 unit complex as long as they occupy one of the units. They have enough equity. Usually it's 65% these days. They have to own 65% of their property, owe 35% or less. They have enough income to prove they can pay the property taxes, homeowners insurance, maintenance on the home. Most people qualify with just their Social Security income, frankly. And then the clean credit history. Credit score doesn't matter, but credit history does. We look 2 years back. If somebody has good credit history 2 years back, they can pay their taxes and insurance separately. If not, we put it into the loan and that decreases some of the equity available to them. But yeah, I think somebody at age 62 should look at it, learn about it, decide if it works for them. I was talking to a guy earlier today, and he was 64, and he goes, "Yeah, I think I'm a little bit young to do this." And he owned his house free and clear. And I said, "Well, hey, Tom, you've got all this equity sitting there, all this money sitting there doing nothing. What's the ROI, return on investment on your equity?" He thought for a minute. He said, "I guess it's zero." I said, "Well, how do you feel about that?" He goes, "Yeah, I probably should put some of it to work." So, he's going to only get about 35% that he can borrow. But now that you can get a line of credit with these, as you probably recall. And now this line of credit can start growing by compound interest year over year, tax free. And then if he ever needs any money, he can switch it and turn it into a lump sum payment or monthly payments. So somebody should seriously look at it as soon as possible, whether they need it or not, because we don't know what life's going to throw at us, right? I mean, I asked a lady just yesterday, she was 69 and she owns her house free and clear. And I said, "Hey, Susan, do you have long-term care insurance?" She said, "No." Okay, 2/3 of us are going to need some form of long-term care. We're going to need to bring somebody into the house at some point to help us cook and clean and bathe and dress and run errands. As we get up in age, we're going to need more help. I said, what if you started today and let this equity grow in your favor? You're earning compound interest instead of paying compound interest. And then when you get into your 80s, you need some more help. You got this big pot of money that you can draw on to pay for that. So she's in the process of doing it. But the point is, I know people think that I have enough money, I'm good. Fidelity did a study where they took a healthy 65-year-old couple and they figured out how much money they'd need just for medical expenses in retirement. 315,000. Who has that kind of money? You're going to have to draw from your investments. You're going to decrease your lifestyle. You might as well leverage your equity and maybe buy a long-term care policy and leverage that.
Well, do we have enough time to talk about specifically how it works for those who have no clue?
Yeah, there's three basic ways it can be used. One is eliminate monthly mortgage payment. So I just had a lady this week that I'd helped probably early on when I was doing them, probably 9 years ago now. And her financial advisor suggested she look into it. And I said, "Hey, Christine, why do you want to do this?" She goes, "I've always wanted to get a Sprinter van and travel to national parks with my little dog in the front seat." The day she got it, she comes by my office, shows me the Sprinter van. Sure enough, she's on her way visiting these national parks. So that one is access equity. That's how she used it. That's one way people can use it. The most popular way people use it is to eliminate their monthly mortgage payment. I remember Alex and Angela came to me, again, referred by financial planner, and they had about $1,100 a month mortgage payment, which we eliminated. They owed very little left on their home, but then they needed more money to live on. So then they could access the monthly payments to them, $900 a month. So now they're $2,000 to the good in their budget each month. So that one's kind of a hybrid: eliminate payment, access equity. And then the third way, a lot of people don't realize this, even real estate agents, some of them don't know. You can finance a home with a reverse mortgage. Why would somebody do that? Well, you've got an older couple who've lived in their home maybe 10, 20, 30 years, raised their family there, but now maybe that home doesn't suit them in the stage of life, i.e., too much maintenance or too much to clean, or stairs. They can't navigate the stairs anymore. So they want to move to a more simplified home, maybe closer to family even. And so they've got a maintenance-free home. They can buy a newer home with updated amenities closer to family in the part of town they want to live in, put one down payment down, and not have a monthly mortgage payment. So those are the three ways people use it: eliminate payment, access equity, and purchase a home.
So tell us a few of the case studies that you've outlined in your book, because I think that taking it down to the tactical and the human level so we don't get too lost in the weeds. Like, again, I understand this product and I want the listeners to understand at least enough to be dangerous to want to go and learn more. So what are some of the stories that you've shared in your book?
There's a guy in the book. I let people choose their pen name so we could protect their privacy, but he chose the name Flash. So Flash had moved up to Michigan, and he's 62. Wanted to bridge it until he was ready to take it. So now he's got a, I don't know, 7, 8 year bridge to when he's 70, to where you start taking Social Security. So he's just living off his equity, $2,000 a month until 70, and then he'll have Social Security. So that's a cool example: access equity. Another one, family had come to me. They moved from Arkansas back to Colorado, and he was in poor health. In fact, he had to be on oxygen at the altitude. And his wife left the room for a few minutes, and he told me, he goes, "Look, I need to make sure my wife's going to be okay. I'm not long for the earth." And I said, "What does that look like?" He goes, "Well, we want to buy a maintenance-free home, townhome or condo, and no mortgage payment." And I said, "Okay." And we ran the numbers, and this is what they qualified for. They bought the house, financed it with a reverse mortgage, one down payment. As long as this remains your primary home, you pay the property taxes, insurance on time, and you maintain it, you can stay to age 150. In other words, you can't outlive the loan. 5 months later, I get a call from his wife, Sharon. "Hi, Kevin, this is Sharon. I'm sure you don't remember me." "Of course I remember you. How are you doing?" She goes, "Well, I'm sorry to tell you that my husband just passed away." And I said, "I'm so sorry." And she said, "Now you told us that if this remains my primary home and I maintain it and I pay the property taxes, insurance on time, HOA on time, there's no monthly mortgage payment. Is that right?" I said, "That's right." She breathed a sigh of relief. She goes, "Oh, good. That's the only way I can stay in this home." Another one, this was a eliminate payment story. A client referred her mother to me, and mom lived on the west side of Colorado Springs, where I live. And she lived in a duplex. And the duplex, the rental side, paid the mortgage. And so I just asked her, I said, "Hey, Carm, how come you're looking at doing this? How's this going to help you?" She goes, "Well, my budget's tight." I'm like, "Man, a lot of people say that." So I said, "Well, tell me more about that." She said, "Well, to be honest, I'm using credit cards to buy groceries." So at the closing, I'm doing the math in my head. We're freeing up the mortgage payment, we're paying off the credit cards. It's about $1,100 a month. So I said, "Hey, I understand the math of the transaction, but how is this going to help you? What's this going to do for you?" This is the only time I've ever been kissed on the cheek at closing, but I got kissed on the cheek by an 84-year-old lady. And she said, "Now I can afford to stay in my home. I don't have to worry about money, and I can sleep better at night." And I'll tell you, if I had $1 for everybody who told me that I can sleep better at night, I don't have to worry about money, I'd be a rich man, because that's really what people have, is peace of mind. They don't have to sweat, making their bills every month. The number one fear, Erin, a senior has is outliving their money, because they're healthier, they're living longer, they haven't saved enough, inflation, all these things are happening, pandemics, and everything's a little unstable. So this just gives them a little more certainty, a little more security in their finances.
I love it. Well, I want to respect your time, but I also just want to highlight something that is really important for those listening who are in either real estate or mortgage sales. Something that came up earlier on one of our coaching calls was this concept of how we change the conversation and impact lives. And, we talked earlier before we started recording that the market has been challenging the last couple of years. And you mentioned that you've actually had the best 5 years of your career since moving into this, utilizing this product as a tool. But more importantly, I think that everyone listening needs to hear this, not from a perspective of, okay, I'm a loan officer, I'm going to go figure out how to be a reverse mortgage specialist or anything like that, but just to think about the care that we can demonstrate and communicate to our clients in regards to their well-being and their future, as well as their parents or their children or their aunts and uncles or whoever, right? And so many agents and lenders recently have been so caught up with like, this deal didn't convert. This client went with somebody else. This one got cold feet and decided to rent for a year. And they're so caught up on the outcome of the transaction that they're missing the opportunity to change the conversation, to think beyond the transaction, think beyond the paycheck, and really look at people's lives and ask yourself, how are you being of value to them?
Mm.
Even if they didn't need your services today. And I just personally believe that anyone listening could look at their database right now and start calling clients that are in their 30s and 40s asking if their parents know about this product. That's a conversation worth having. Or calling those clients that are in that empty nester phase that are in their mid to late 50s and ask them if they've ever heard about this product. Like, just start the conversation because you're able to articulate your value as a high level advisor if you're willing to have conversations that go beyond the day that you get paid because they closed on a transaction.
That's beautiful. I love that. Here's one thing I say. People's reaction when they hear about it is, it sounds too good to be true. And they say, well, it's not too good to be true, but it is too good to be free. And that's one of the downsides, actually, is they're expensive. What makes it expensive? Well, these are FHA-backed loans, and they come with mortgage insurance. So, you have your normal closing costs on every loan, but this also has mortgage insurance. And that's 2% of the value of the home. So on a $500,000 home, it's 2%, 10,000. Now, most of the time we roll it into the loan. People aren't writing a check for that. Almost all the fees are rolled in every time. But the point is, what do you get for that? Well, the lender's insured, they're going to get all their money. The borrower is assured, they're not going to have to pay it back. And they're passing on zero debt to their heirs or their estate. It's a non-recourse loan. So that is the one drawback. You kind of asked me a second ago and I didn't really answer fully, but that is the main drawback, is it's an expensive loan. So it's not too good to be true, but it is too good to be free.
Well, something that you kind of alluded to earlier, which is something that I also think is powerful, is let's say somebody is financially okay and they think that the best thing for them to do is pass along a mortgage-free home to their children, and the children don't want that property. And this is such a common issue, right? So what I have seen people do as well is instead of like letting this mortgage sit there, be mortgage free and pass on something that your kids may or may not want, you can also turn that into drawing the equity to reinvest into other types of cash flowing assets or other type of long-term vehicles that are going to pass on far more wealth to your heirs if that's something that's important to you than simply a free and clear property that's been lived in for a long time, right? So I think that there's so many ways to get creative, and sure, sometimes this product is solving a need for somebody who's stressed financially. There are other times where this is an absolutely incredible tool for enhancing your financial plan, which is why it's interesting to me that you've mentioned getting so many referrals from those financial planners. Like, why would we let that opportunity cost of that equity just sit there, not be put to work? It can amplify your wealth building journey. And from the age of 62, that's pretty young for today's day and age. Like, you have a lot of life to live, and to think about the ways that you could leverage that and compound it to build wealth while you're still here enjoying life is a beautiful thing.
And one of the things we ask people, because there are a lot of grandmas and grandpas that do these, and I'll say, hey, do you have grandkids you'd like to help? Yeah, I want to get this equity so I can help my grandchild with the down payment to buy a house. We call it giving with a warm hand versus giving with a cold hand. Giving while they're still alive, while they're here to see the good that it's done, versus when they're in the grave and they don't know what's happened to their assets. The kids are fighting over it a lot of times. So yeah, you're right. I mean, learn about it now, access it now, leverage it now. I had one guy, he was concerned about leaving less to his kids. So I said, why don't you take a chunk of money and buy a permanent life insurance policy so your kids actually get more than you would have given them with equity, tax free, and then you have this equity that you can do whatever you want with. So it's just all over the map. Historically, these have been loans that are loans of last resort, right? I'm broke. I better go get a reverse mortgage. I'm a big loser. I didn't manage my money very well. But that's changing because people of means who quote unquote don't need them are now tuning in and saying, wait a second, I've got X 100,000 sitting here doing nothing. And I can leverage that. Like you said, I can buy another business, I can buy another asset, I can help my kids or my church or whatever they want. And it's just people love the flexibility of it. It's kind of like a fingerprint, which is why, the stories in the book, they're each different. How people use it, it's very unique. So yeah, thanks for mentioning that because I think we're oral stewards of the resources we have. We want to leverage those and do the best we can with those resources.
Well, that's honestly the purpose of this podcast is just to put more tools in the tool belt. And we're in a society and industry right now where if more people listening could simply find a way to have more conversations, get out of your head around what you're going to get out of this interaction, come from a place of, hey, have you heard about this? Start having more conversations and you will have more business. And I'm just saying that from a perspective of the business comes as the direct byproduct of your contribution. It's not because you picked up the phone and you got a lead out of it. That's not the purpose of your call. The purpose is to communicate value. And this is just another tool in the tool belt. It's another conversation starter at a very minimum. And I hope everybody listening will take that to heart and go have some more conversations and get curious. How can they get a hold of you, find you, follow you? Are you licensed in all 50 states? I mean, a little more information so that if people want to get a hold of you, how can they do so?
Yeah, thank you. I'm in 18 states. Our company's in 35 states, so I can cover most of the country or refer it out. My website has a lot of great resources on there. There's some videos, there's a consumer guide that I wrote, there's interviews, podcast interviews, and television interviews, etc. ReverseMortgageRevolution.com, and people can download the guide for free and read it if they want. It has a lot of great um, just pretty much anything you'd want to know about a reverse mortgage is in that consumer guide. So it answers a lot of questions for people. The last thing I'll say, Erin, to your point, nobody comes to me to get a reverse mortgage. They come to get what a reverse mortgage can do for them. And when we can do what you just said, kind of mine their interest, like, why do you want to do this? Why is this important to you? How's this going to help you? Current self, future self, right? And then they're like, oh, wait a second. This is actually a good thing. This is actually going to help me accomplish what I want to accomplish. I thought it was bad. I did my research, found out, oh, it's actually good. I've had so many conversations like that. It's pretty funny, actually. People, when they really learn about it, they're like, oh, this isn't what I thought it was.
Yeah, I couldn't agree more. Awesome. Well, thank you so much, Kevin, for taking the time to share your story with us. And I hope that those listening will grab a copy of your book, How a Reverse Mortgage Changed My Life. Because, like I said, at a minimum, be educated, be leading the conversation, be presenting yourself as an authority. And you too could be having your best years ever in any market, just like Kevin. So thank you so much, Kevin.
Thanks, Erin. I appreciate it.
And to all my friends out there listening, as always, I appreciate you tuning in. If you are enjoying the content, make sure that you stop what you're doing right now, park the car, and leave that 5-star review because it really does help us continue to attract amazing guests like Kevin and help this content get found so more people can build a life you don't need a vacation from. I love you. I appreciate you, and I'll see you next time.